it's nice to see that we're coming out of the pandemic. I think people's mindsets are probably recalibrated a bit, but I'm certainly excited to see people in person. Although I've made a bunch of friends this year as well. I just haven't seen them in person. I might have met them over the internet. So it's been quite an interesting year in that regard.
That's awesome. Yeah. I had a little bit of a different, I think I lived the day of the shelter in place in San Francisco was the day I moved to a different apartment. And I was there right from, I think, late Feb, early March until October. Super intense sprint of work, making sure that everyone would raise money, that people will, not that the companies wouldn't die. I mean, I think we've and also seeing the beauty of the future that we thought was going to happen in 3-4 years happening faster, right? I feel like if for all of us in venture, these were the three big buckets. Then after that, I started traveling. I traveled to over 35 different cities in the U.S. and in Brazil, and never caught the virus, fortunately. And and then moved to Miami.
That's great, man. Well, I'm excited to come and see you in Miami this week. I'm very curious about what the new capital of capital looks like.
I love it. It's beautiful. I think that isn't it wonderful to just have people that want you around versus what happens in San Francisco? It's just great.
Oh, I mean, look, I think I'm really curious to see what Miami is like as a city and as an ecosystem, because I think one thing that'll be interesting to see is the fact that there's so many people who are now coming to the place at the same time, and it's a new place for everybody. I wonder if people will be more open to connecting with each other, to wanting to build it together. And, everybody's starting kind of at the same place in a sense versus San Francisco. I think, there's just been so many different layers of different communities, right? There are people who've been there for a really long time. There are people who've started companies more recently. There are people who come. And I think it's just a different way to kind of break into the San Francisco ecosystem, right? I mean, I came 3 years ago and, made a ton of friends, met you. That was great. And we obviously did a lot of things outside the US, but I think, it's people have their communities in SF, whereas I wonder if in Miami, people, because everybody's coming at the same time, and it seems like there's a collective shared interest in wanting to build it into this kind of special city, that maybe there will be something really interesting there.
So we're in June, right? June 1st, May 31st, when we're recording this. It's going to be published probably 5 weeks from now, 6 weeks from now. We'll say this on the record for people listening. So if something changed, stuff happens. But I will tell you, though, having been here for 6.5 weeks, I have never been happier and more integrated with nature. It's just everything about this city is fantastic. And I've been here. I came here 2 years ago. I was in a previous relationship and I was looking to potentially move here. And after spending a week here, I was like, oh, when you come to Miami, does it also come with a Glock? Because I'm going to have to shoot myself because just, it was, you did not have a lot of smart, ambitious people around. You had some little pockets, right, that made this place amazing. And, all these other folks that they call the Miami OGs. But you did have a lot of I consider myself a hustler, and I've received this nickname multiple times from multiple people, but I think there's a definition of good hustle and bad hustle. So these will be like, almost your used car salesman type of like hustler, where you sit down with someone and they have everything. They're like, oh yeah, I got this like a little startup here, but I also have this family office, but I also do this like golf thing. And you had these conversations with like, but what do you do exactly? I don't understand. And I had many of these meetings here. I remember coming here 5 years ago for an angel forum, and was talking to this one VC. It was a Boca Raton VC. I don't even remember the name of the guy or the firm, and frankly, I don't care. But it was more, they're like, oh, we don't do safes. I was like, what do you mean? I mean, that is a very healthy instrument that was purposefully designed so rounds happen faster and cheaper. Of course, that it's not the safest thing, is not the same as equity. And I got really technical with him, like, and that time we didn't have the post-money cap safes. So you really didn't know exactly the ownership you'd be getting at the conversion. And we had that conversation, and then the guy, it was as if I was talking Chinese. All he wanted, he was like, oh, I don't like safes because as an investor, I like to fuck my founders. It was like that, right? Like they enjoy. He didn't say it that way, but it was more about like that power dynamics of like, I have the money, so I own you, and we know like that's not how it works in Silicon Valley, or at least within that way of doing business, right?
Yeah, I mean, I think that's totally right. I mean, we see this in other markets too. I mean, I think Latin America, as the tech ecosystem has grown and matured there too, right? Like you have many family offices who their mindset is that they are business owners because they've been successful at building a retailer or building and owning the largest supermarket in a country or the region. And they think about investing into companies very differently. And it sounds like that's a similar mentality in that sense where you have to own it. But what it does is it jacks up a cap table and makes it very hard for the company to be investable early on from seed stage VCs, then Series A, then Series B, then Series C, et cetera. So, yeah, it'll be interesting to see this ecosystem mature. There were obviously people there, and it was actually quite a vibrant tech scene. We just may not have heard about it as much until more recently, where we probably have to give credit to the social media efforts of the mayor. But,
yes.
They've done an incredible job. It's really impressive.
Incredible. I mean, what has been happening, and with the velocity that it has been happening, it's kudos, to the mayor, the folks at Founders Fund, and a bunch of other people, because, frankly, we were never designed to live life that way. And the sheer, I mean, this combination of like technical, like just ignorance from the government, while also enjoying the control over its citizens, which is absolutely not what America is about. And also, America is not about, not wearing masks or not trusting science. There's a middle ground. We just went to these like polar opposites, and that's what I think it's the most refreshing thing about Miami, in my opinion, is that it seems balanced to me. And you have that Miami, the Papi Chulo purple Lamborghini, pink. Yesterday I saw one next to another, a bright pink Lamborghini Urus next to a purple one on the street. Sure, I mean, that's not going to go away. That is part of Miami. And I don't come from a place of attitude of like, vegan, Prius, virtue signaling San Francisco stuff. I think if you have money, enjoy your money. But Miami's not just that. It's not that fleshy stuff. There's this whole incredible, mindful community and amazing local founders that have been here for a while. And there are, I guess, even new OGs of Miami that have built incredible companies, exited, and then they just weren't loud about it. But now you've got this combination of, Mayor Suarez with Kiefer Boy on Twitter that is just really good PR.
Yeah, I mean, it's interesting to think about like what the elements are that make a great startup ecosystem too, right? Like how vibrant does the investment ecosystem need to be, or the angel or early stage ecosystem need to be in order to create a vibrant tech community? I mean, I think we've seen, obviously, San Francisco benefits from the fact that you have all these founders who are incredibly successful. There are early employees who are incredibly successful at these companies. They then leave and start other companies, but they keep the money in the ecosystem. I think that obviously helps, right? You have a really vibrant angel ecosystem. You have a critical mass of early stage funds, right, which helps. And I think that does help. Like, there is definitely value in being in San Francisco from my perspective, in terms of being able to build relationships with other VCs. I mean, as we know, we did a deal together, and you actually were the reason that we got into that first deal that we did together, and which I really appreciate, by the way. It's like that kind of thing really matters in terms of building relationships. So like that critical mass and density of people does matter in some way. I think COVID will test that a little bit, but between that and then the universities, right? You have great technical universities, Stanford, Berkeley, and all of that. So it'd be interesting to see if Miami's able to replicate a lot of that.
So that's a phenomenal point. And I think that the first thing, it's not that Miami should not try to replicate anything. meaning, and then all the other ecosystems. I always find it disappointing when I hear these other ecosystems talking about the silicon of acts, like Silicon Beach, Silicon this, Silicon that, Silicon Slopes. It's like, no, you just want to be, Miami should be Miami. And what is it that it can offer, right, to people in, go ahead.
Oh, I was just going to say, what do you think are the advantages that Miami has that other cities don't have?
Sunshine. That's the number one thing. Phenomenal vitamin D. It's great for your mood. It's true. I mean, that's one of the most interesting aspects of it. The second thing is just gorgeous aesthetics. Everything here is pretty, from the people to the, the cars, the shops. And you don't have to necessarily go into this route of, consumerism dementia. It's not that, but it's just nice to be at a place that's clean. I forgot what it's like to live in a clean city. I mean, living in downtown San Francisco for 9 years, you get used to the fecal matter on the streets and just drug. I mean, it got out of control for me personally, to the point that, I was born and raised in Brazil, and in Sao Paulo. I left to come to the U.S. when I was 20, or 2021. I'm 32 now. My mom has been kidnapped twice, and I was more scared to be in downtown San Francisco during the pandemic and go out than even sketchier parts of Rio and Sao Paulo, because it's just the reason why is because it's extremely unpredictable. Someone might be ultra high on fentanyl or meth, and they might stab you, and you can't really predict that, at least in large cities. And you can't put Mexico City there. You kind of know, right? Mexico, you'll be like, in Condesa or Polanco, you're okay. It's like, not, right?
I feel safer in Polanco than I do in parts of San Francisco.
Exactly. Now, that is exactly
Polanco,
my point.
I mean, right? I mean, sure. That is a really interesting point. I am going to push back on one thing, though, which is, do you not think that all of those things you're saying about Miami actually create more distractions, in a sense? Like in San Francisco, there's not much open past 10 o'clock. So you can actually just work. And I wonder if there's like some element of like the fact that there's, not necessarily a ton to do in that regard, in the same way that there might be in Miami, and it might not be as conducive to being outside. So that's created an environment of like people are going to spend their time working rather than having fun.
Well, I think it's a phenomenal litmus test to the quality of your ambition, right? Think about it that way. I've been here and I have said no to many different parties or opportunities to do this or the other because I just want to crank and be in my little cave and do my work. I am wired that way. So honest, at the personal level, absolutely does not affect me. And I think it's our fiduciary responsibility to be able to judge folks' characters for that. The reality also is that, there are a lot of people that were in San Francisco that were just tired of it. We were just there because we felt like we had to pay that price, because where else are we going to go? We love our work so much that it's okay. But then there was a time where it was just like the absolute limit. I remember the nights of the protests after George Floyd died. And it was a terrible thing. No one should have, someone else's knee on their neck for multiple minutes. That officer should be arrested and so forth. So that's not even a question. And this country has a lot of problems regarding race. But in the United States of America, you don't break property. You don't break shit up. You have your First Amendment and you protest in an organized, you can be smart about it and like annoy people with noises or doing it at inconvenient times of the day, but don't touch property. And even if you think about the most sacred, bedrock of capitalism, which is like the Carta Magna written by John Locke, like just don't break stuff up. So by the minute that you do break stuff up, then I am okay with, the authorities then breaking you up and then putting you in jail because you're committing a crime. And, you can't justify more violence with more violence. So you need order. And, I used to live on Mission and 3rd. And then, and our offices were, remember, like the old offices we were at the T3 studio, right? So 10 different VCs at that. So I could hear them destroy things from Market Street. And the next day, I went out at like 5 a.m. in the morning, and I saw everything destroyed. It's as if it was like a massive war that just happened, and everything broken, and that energy of just the energy of San Francisco it became this really weird thing. And I don't know how it's like now. Like, I'm going to be there in August, but.
Yeah, I mean, look, I think it's a really valid point in the sense that, like, San Francisco has to some extent driven certain people away, right? Because it isn't the easiest city to live in. And I think San Francisco as a city has lost out on economic opportunity as a result of that, right? I mean, there have been conferences that have decided not to hold their conferences in San Francisco, or they've pulled out because you go on Market Street, it's not the safest place in the world at times. And to your point, I think the most scary part, I've lived in a number of cities, lived in London, walked around at all parts of the city, all times of night, same in New York and San Francisco, and you can't do that in San Francisco for the sheer fact that it could be in the middle of the day that somebody could be very unpredictable and physically harm you.
That happened to me once. I had a founder come into the office to pitch, and he was robbed in front of the office. Right, and we were right next to
great selling point to hey, you have to come and get money from us, but you might get robbed beforehand.
Like, just he was there, and then kudos to him that he still wanted to pitch, and he was like, "No, I got my deck on my phone offline. I'm gonna AirPlay it to the TV. It's no problem. I'm gonna get this done because I'm here." I was like, "All right, are you sure? It's okay if you want to reschedule, but." Kudos to him. We didn't fund the company, but I was impressed with that. But I was also sad. I was like, "Fuck!" Like, someone was just robbed in front of our offices, and they had a meeting with us, and it's a very uncomfortable situation.
It's nice to hear that Miami doesn't have that element. No, I'm excited to come down this week and see what it's like.
Yes, well, I'm looking forward to seeing you as well in person. But then let's talk about you, right? Because we've been, it's been a while, and I think that there's so many topics. But I think you're curious more about your journey. So you went to study so you grew up in DC, right? How's your childhood? Let's learn more about you.
Yeah, so I grew up outside of D.C. Actually, I was born in New Jersey. I moved when I was 1. I think it's fair to say I'm probably not from New Jersey. I'm from Maryland, given that I grew up majority of my childhood in Maryland. And ended up was a big athlete. Ended up playing soccer and swimming. Had to choose between those two sports, so ended up playing soccer pretty seriously all the way through high school. Played outside of school as well. And then, decided to go to London School of Economics. And, I think it's been a fun journey, very unpredictable. And I think growing up here was a great place to grow up. I feel really lucky. My 3 best friends are actually my 3 best friends from when we were 3 years old. We met at preschool, played sports together. I was the odd duck who went to the rival high school, which, I put rival in air quotes because our mascot was the Grasshoppers and they were the Fighting Quakers. But yeah, it was. We're still all really good friends, really close. So, it's just a great place to grow up. And then there actually, believe it or not, was a tech scene outside of DC. Most people don't know this or wouldn't think about it, but AOL and Netscape were there, and in Northern Virginia, and my dad was actually in the tech scene in the DC area, so I was able to kind of be exposed to that at a young age and see that in kind of Internet 1.0. So it was an interesting kind of time to grow up and an interesting place to grow up. Yeah,
well, a few people know that NEA started in DC, right?
They absolutely did. Yeah, they started outside of Baltimore, and then have an office outside of DC in Chevy Chase, which is basically right on the DC border. And we have one of the best VC funds in history, and one of the largest, right? So they've raised incredibly large funds, and I think are, in terms of AUM, one of the largest VCs. And they started outside of DC, which you wouldn't think of DC as the capital of capital for technology. Let's put it that way.
Yeah, because that's already Miami, baby. No, I'm kidding. There are a lot of interesting things. One point about the Miami thing that you've mentioned, the universities, I think that it's not a problem that we don't have Stanford or Berkeley because of remote work. It's the one thing, a post-pandemic Western world with Judeo-Christian principles validates Miami as a very viable choice. And one doesn't have to kill the other. I continue to be very interested in doing businesses in California. I just don't want to live there anymore.
No, I hear you. I think remote work is going to change things. I do think that having critical mass of certain companies can be really valuable. That's why, like, I'd love for DC to become a tech scene. I would actually move back here and then have no problem doing that. If I wish it were to become more of one. But Amazon coming here, I think, may have an impact. So I'm curious to see what that's like. And then, I mean, there are some great VC funds in the DC area. I'd say, one of the best fintech investors, QED, the founder of Capital One, Nigel Morris and Frank Routman. I mean, they started QED from Virginia, and as Nigel has said, they're founders aren't biking to them to pitch them. They have to find companies all over, but it hasn't hurt them. I think in part because they've built a reputation. I mean, they built a real business. Capital One, incredibly successful bank, well ahead of its time, very data driven. So I think that helps, and that gives you some level of freedom as to where you can be, but. But yeah, I'd love for DC to become more of a tech scene, to be honest.
Yeah. I mean, for me, I started my journey in the U.S. in Boulder, right when Techstars was just starting out, having been one of the first business hires at SendGrid, which was Techstars' first IPO. Mm-hmm. And it's interesting how, like, the Boulder ecosystem with what David Cohen and Brett Feld and what they've done, for a long time. I think that LA had that problem as well, where, when you think about LA, you would think about Upfront and Mark Suster, and then, suddenly there were, now there are 30 high quality firms in the LA ecosystem. There are a few new firms in the Colorado ecosystem. One that I even an LP in, Range Ventures, it's a great firm. So Colorado is also growing, and I think, I don't know about what's going to happen in Miami in terms of folks saying, "Oh yeah, we're like a Miami firm," because we invest everywhere. So for me, that logic of saying I am based, it makes so little sense at this point, because everything's just the dynamics have changed for our business.
Oh, I think that's totally true, right? I mean, you can connect with founders over a virtual medium in a way that you never could before. So you could be based in DC, you could be based in Miami, you could be talking to founders in Brazil or in Tokyo or in London, and it doesn't really matter. Now, I think there's some element of, like, meeting some of these people in person. You do lose a little bit of that interpersonal connection. But in some way, there's some benefits to it, because it definitely democratizes access to being able to fund entrepreneurs all over the world without having necessarily been there. And I say that with the one caveat of, it can be helpful to actually spend time in some of these places. Like, we've done a lot of investing in LATAM, as you know, and I think being down there and understanding the ecosystem, like how people, particularly if we're vertical specific investors, fintech investors, like how people live in a cash-based society, how they interact with their financial services providers, how they interact with the incumbents, like all that matters. So I think there's some element of, like, needing to be on the ground and be in person with both founders and also the ecosystem. But at the same time, I mean, yeah, you could be based in Miami and fund companies in San Francisco or wherever, right? It doesn't really matter.
We're still not in that flow yet, but I suspect that the perfect flow will be probably 7 weeks Miami, 2 weeks in Palo Alto. I still have a place in Palo Alto. I kept, like, an office in place, and so 2 weeks in Palo Alto, 6 weeks Miami, 2 weeks in Sao Paulo, or 2 weeks in, could be Mexico City, Bogota, and so to continue to do the U.S. LATAM cross border. But I want to get to the LATAM investing. But first, I didn't know, this came up in research, that you were a professional soccer player.
Well, yeah, I tried. So like I said, grew up outside of DC, played soccer at a pretty competitive level. There were there were teammates of mine who were much better than I was. I was nicknamed One Speed Sidgmore because I could play for 90 minutes, but only really at one speed. Like, I wasn't the fastest, but I'd still be just as fast at the 90th minute as I was at the first minute. So, which was fine for an outside back. I was a left defender, but yeah, I tried to go play over in the UK. I was actually inspired by one of the teams that I played with. Our coach was English. He played in the English youth system. He's a fantastic player. Played for Sheffield United, Derby County, I believe, as well. And he took us over to the UK to play some Premiership youth clubs. And we played Liverpool. We played Sheffield Wednesday. We played Preston North End. And it was just so much fun. Like, I like, you know, it's kind of like when you're in the mecca of whatever that your vocation is, right? Like, I know Brazilians might have something to say about that. And I did, when I was 15, I did go to Zico Centro de Futebol for a little bit. So that was fun. The kids who were a little bit younger than me were also like running circles around me, but that's also not surprising. But yeah, but like when you go, just like there was one point in time when going to, like, if you want to be in tech, you go to Silicon Valley. If you want to be in movies, you go to Hollywood. And if you want to play football, you go to the UK, right? And it's like, because it's not just the big teams, but it's like every single town has their team, and it's like right next to the stadium is flats that are lined up, and it just feels like part of the community. So I just, when I experienced that, I was like, I got to go try to play over in the UK. So luckily I had a gap year. I kind of created that I decided to go to Middlebury College in Vermont, which is a liberal arts school in the Northeast, and I was going to play there. But as a result of that gap year, I missed out on the year that they won the national championship. So that was, who knows? I'm happy with my path, but they did win the national championship. But yeah, I tried to go over and play in the UK, and played for a non-league, so 2 leagues below full professional. Played for a bit, and this was after 2 hip surgeries as well. So I actually went over, tried to play, had some trials lined up, found out I needed hip surgery, so I had to delay my time over there. Came over, found out I needed another hip surgery on the other side, got that done. And then finally, after kind of cold calling my way through various teams who would be willing to take on an international player, because you only have so many international slots, and damaged
as a policy
surgeries. Yeah. If you're in a certain league, right? So like even the MLS will have this. You can only have a certain number of international player slots because every league wants to have majority of their players homegrown from that country. So, I mean, they would have had to use a slot on me. This, you know, I was older for my age too. Like, if you're 18 and you haven't made it professionally in the UK, like, you know, who are you, right? So, I mean, we had guys who got cut from Chelsea or Arsenal youth teams, and doesn't mean they weren't good. They just, you know, weren't good enough to make the cut of like 1 in every 10 or 11 players in any given year doesn't graduate to the full professional team in Chelsea or Arsenal or Crystal Palace or whoever. And so I tried. It was a ton of fun. Decided I did get offered to stay for a very small sum. So I could have gotten paid, but I was like, you know what? I should go to university.
What was the offer?
I can't play in university. So it was £50 a game. So it would have been enough to live on like beans and toast, I think. So
yeah, well, it's £50 a game. All right. Well, but you got an offer at least. That's already pretty great.
Yeah,
with 2 hip surgeries and being a foreigner.
I knew I wasn't going to be the next, like, you know, Ashley Cole or Cristiano Ronaldo for sure. So I decided to go to university, and that was what kind of set off this whole journey. I actually so went to Middlebury, got injured my hip again, and then kind of after that whole process, by that time, I thought I was like going to have some sort of career in soccer. Like, I love the game, love playing, never thought of really doing anything else. Thought, oh, like it'd be fun to be a coach or something. And I was like, you know, I need to think about what I want to do the rest of my life. So I really started thinking about it, and I decided to actually transfer from Middlebury to London School of Economics because I had during my gap year when I was injured and trying to recover and play again, I'd also read this book called Leaving Microsoft to Change the World by a guy named John Wood, who he himself left Microsoft in the 90s, the height of their growth and success, to start an international literacy NGO called Room to Read. And his book was just incredibly inspiring, really opened my eyes to how to build a business, even though it was a nonprofit. And that was where I kind of realized, you know what, I ended up cold calling John, working for Room to Read when I was in London for a better part of a year when I was on my gap year trying to play. You cold called the author
of the book.
Yeah, just emailed him.
This is great. This is the common theme of every guest of the show, which is that we all cold email and cold call a lot, but we just do it with the right sophistication, and then people get back to us. It's interesting that people don't understand how opportunities are accessible to them.
They are. I think cold calling is a really interesting thing. I think you have to be
emailing.
Inspired
no one picks up
enough.
The phone today. But yeah.
I think you have to be inspired enough to have a real reason to reach out to this person, and have to be able to add value to them in some way. It can't be just, oh, I want to meet or talk with XYZ famous person because I want this. It has to be good for them in some way, where it adds value to what they're doing or what kind of to their life, right? So I think, and I know a lot of people do this now, and I think it's great. And I think things like Twitter have democratized access to people, and they've democratized access to identifying intelligence in some ways. There's some dangers to it as well. But I think when done right, things like cold calling can emailing John Wood for no shadow of doubt in my mind changed my life.
I love how you put, I think this is the best Twitter definition that I've ever seen. It's democratization of intelligence. That's what Twitter is, if used the right way. Because I think that there isn't a single day that I don't go on their website and I learn new things, because and it's not because I just follow people that, there's a portion of it that certainly reinforce my confirmation biases. I think we're all that way. But you learn new things, and you see also the ability to observe others interacting is also really helpful.
I think that's totally true. I think, and that actually kind of gets into some of the things that have happened this year, which I would say, like, I have barely left my kitchen. Actually, my mom's kitchen. I came home for the year to hang out with my mom because I made up for living in London for 5 years, and we were working from home, and it's been a ton of fun, and obviously a terrible year in so many ways for so many people, but a blessing in disguise in that regard to be able to hang out with my mom and our dog and really spend quality time with her. But in some ways, I've gotten more done this year working from my kitchen, and people, they know me from my kitchen background, because there have been plenty of founders and other VCs who have just met me this year. I've met them this year, and yet have still gotten so much done. And I think that's because of online platforms like Twitter, or this platform we're using right now, like Riverside, right, where you can just stand up a podcast and connect with people around the world. And I think that's a really important feature of the world we live in today, which is that, online communities are incredibly important. Online identities are incredibly important, and can really shape who you are and how people interact with you, because you're putting things out into the world. Now, again, I think there are some dangers to it, right? Like, people can be someone who they're not online and not be the same person offline. So I think there needs to be some element of, how is somebody, genuine online? I've struggled with this because I'm actually a pretty private person. So I didn't use Twitter a ton before this year, but I also realized that, you kind of have to interact with people in an online world, because our online identity does shape who we are. I think I give credit to Alexis Ohanian, who's really shaped me in that regard. He's been doing this for 15 years or so, and that, seeing him do this and talking about this with him, which we do on our podcast called Community Times Capital, like, that's really shaped my view that, you really need to have an online identity, because that credentializes you. People look to that, and that can actually add value. Again, you have to be genuine, but it can add value to the broader online community. So that's where I think things like Twitter can be extremely valuable, where people are sharing content. And it's helping other people learn. Like you said, you and I learn things on Twitter all the time. Now, you just hope that people are being genuine about it.
Exactly. I think that you touched on a very important point about the online presence that we have really being a formative part of our identity. So I think that ultimately the universe will end up rewarding pure authenticity. And for me, at least, there are all sorts of specific aspects of my life that are absolutely private and will never be on social media. But I post a lot, as you know, and I am totally comfortable with all these other parts of my life that then do shape that identity. And there's certainly a box, right? It doesn't define me, but there are a lot of different, like, specific things I'm very comfortable saying it on the record and talking about it. But I also am a consistent person. When I'm with myself, I'm the same person that I'll be in front of 20,000 people, and the universe rewards that.
I think you're hitting on the mind shift that I went through, which I think is the really important aspect to this, which is just be yourself. It took me a while to really figure out how to do that and digest that online, because like if you're a private person, like I'm offline, of course, want to be open with my friends or colleagues or whoever, but online it's like it's there for the world to see. And, it's just a different level of like, oh, wow, this is out there. And it's not that I don't think I would, I don't think I would do anything crazy online, but it's just that, you have to really think about all of that. And I think that was the hurdle I kind of had to go over, was like, oh, you know what? Like, I'm just going to be myself. People may not like that. Some people may not like it. Some people may be totally fine with it, but it makes people, I think, number one, and to be receptive to who you are. And number two, I think, trust you a little bit more as well. Like if you're putting yourself out there, and I think this gets to creating as well, which is, I think it's such an exciting time to be a creator online, is that people are creating things, right? And they're putting their work out there. They're putting themselves out there. That's vulnerability, right? And I think, people respect all of that. And that's, I think, a really important thing. I think one thing that actually made me very happy was, because I don't know how I'm doing this. I am not a master tweeter or anything like that. But one of my good friends who does not have a massive online presence, he texted me the other day and he's like, I love how genuine you're being online. Like you're out there and you're posting, and you're talking about things, and you're doing these podcasts, but you're just like staying true to who you are. And it's like, okay, well, that seems to be like the right way to do things in this online world, which again, I think is becoming more important, whether we're in VC or not. But I think certainly if you're in the tech world, it's important to have an online presence, because that's how people interact with you and see you.
Yes, I agree. Matt, is there a problem? Or maybe a button was put? Oh, no. Okay, cool. Sometimes, like if there's some sort, he's always there to help us, but no. All right. All right.
As a good producer would be.
As a good producer, yes. This will be basically, we're trying to do the Joe Rogan for investors and startup founders, long format with a bunch of short clips, so he's our Jamie, I guess. But for those that listen to that podcast. But anyway, I think that what you're talking about is people like you and I, we will be absolutely rewarded by that authenticity. And I'm already receiving, like today we published the 6th episode. And, I think we're going to end the year probably with like 45, maybe 50. And they're like, oh, now I feel like I'm following it. And I'm excited every Monday when a new episode comes out. And I know you intimately, because every episode we talk a little bit more about a bunch of different things, right? And all of us, there isn't really, we're all trying our hard. We all have fears. Everyone goes through a little bit of imposter syndrome. And we all go through a lot of trauma as well. But it's important that we can peacefully respond to trauma and talk about it in a nice way that hopefully heals us, but also inspires, other people, right? So, for instance, I kicked my father out of my home when I was 17, and that was a very tough situation. Today, I have a good relationship with him. It's respectful. You lost your father at a young age, and that shapes who you are. And it's important, I would say, for the people that want to work with us, because of the type of business that we're in venture, and the way we partner with people. You want to be intentional and you want to be vulnerable, because that's how, we help each other, right?
No, look, I think that's 100% true, right? I mean, like sharing who you are and what drives you and kind of what made you the person you are. I think like platforms like you're creating for people to share all of that, I think is fantastic. So people can learn more about you and learn more about the people who are on it. So I think it's absolutely right when it comes to something like that.
Absolutely. Yeah. I mean, and the fact that your father was in tech and now you're doing what you're doing, I think he'd be like super proud. It's awesome.
No, I appreciate that. Yeah. I mean, it was hard. I mean, he was only 52 when he passed away. I was 15. So I was freshman year in high school. So I think my high school was very different than most, because I just had to, and I'm an only child. So it's just my mom and me.
Oh,
we have a very small family.
I'm an only child as well. There you go.
There you go. Right. I'm sure people think certain things about us because of that. But you know, I think.
How many times have you gotten the so you're very spoiled speech? Right?
I know. No, I hope that people don't think that that's the way I am just because I'm an only child. I do think it has made me like be fine being on my own. Like I don't need to hang out with people all the time because as a kid, like you grow up having to learn just how to be on your own and like keep yourself occupied, like sit and read or learn things or do something, but you don't have somebody else to necessarily play with to do that or interact with. So I think that's, that was, I think, actually one of the benefits of being an only child. But in my case, I was very close with both my mom and my dad. My dad in a different way just because he was working so much and traveling all the time. So we didn't see each other as much, but we'd always make time on weekends. Like we'd go to get bagels every Saturday. We'd go to Washington football games every Sunday if their games were on, or he'd drive me to soccer practice or games or whatever. So like we'd always make time to see each other. But yeah, I mean, it was very difficult. I don't think I realized it at the time because you kind of just get on with life a little bit. But then it certainly hit me by the time I got to college because I was a little bit older than the kids who were, my peers in college, because I took this gap year and I was older to start. I did 2 kindergartens, so you can infer what you want about me from that.
You flunked kindergarten.
Getting held back. No, I moved schools, but I don't know. Who knows? Maybe
you punched another kid in the eye. What happened?
No, I definitely didn't. So I give credit to. I did get a red light once in school, and I was very, very mad about getting a red light that time because that meant I had to do timeout, and I was really disappointed with myself for that.
Getting a red light is like a timeout in the I don't like that. Is, I see. As a kid,
you're pulled out of like the group activities, and you just have to sit in the corner by yourself. So the teacher shamed me and made me sit in the corner and look at the wall for like an hour, which it was totally unfair. I should not have gotten a red light for that. I don't remember exactly what I even did, and she was wrong. And I think she admitted it at the end of the year to my parents, but I told her that. So I think that's why she was like really pissed at me. But
yeah, 27 years old, you still remember.
I still remember the red light. That's exactly right. No, I know. It's funny how those moments are kind of like etched in your memory, right? But I was a little older than a lot of my peers in college. So once I kind of had this gap year and like lived in the working world, I worked for this nonprofit, had to like try to figure out my soccer career or football careers. I still sometimes stick true to my UK roots in that regard and call it football. But from that kind of experience, I kind of like there was something that clicked when I started in college. I was like, wow, like, my dad passed away so young. I need to just do something. So like instead of like doing the normal things that like kids would do, like party and go out and drink and all that kind of stuff, I was just like, I just want to work and do something. And I just felt like this need to just do something, right? I mean, my dad took me to the office like every weekend as a kid. So all I did was see him working. And I didn't think that was a bad thing, and it wasn't about like work-life balance and needing that. And maybe that's why we both love working. But like, I saw the joy involved with it. Obviously, not every moment of work is joyful, but it's, it's like you learn about like what it takes to actually build something and the grind that you have to go through, and not to like kind of make the kind of putting hustle on a pedestal. But I think there is some element of like, if you want to create something and build something, you have to put in the time, and you have to put in and there's no substitute for that. You just have to work hard. And sometimes it works, sometimes it doesn't, but you really have to work hard. It doesn't mean you can't spend time with your family, spend time with your kids. He did that. But I think the key there is just like, you have to be present. I mean, he was present with me. He wasn't checking his emails when he was hanging out with me. Like, he was there. He was sometimes even yelling at the soccer referee on the sidelines, So he was definitely engaged in the game. Sometimes he didn't always know the right thing. So I was kind of like, times like, hey, Dad, you got to calm down on the sidelines, So I hope that he would be on I hope that he'd be on like the left side of me, because I can't hear my left ear. So I would just hope and pray that like the sideline that he was on my left side, so then I couldn't hear him and I would just drown it out. But but like, I think being present is just so important, but it doesn't mean you can't work really hard at the same time.
I agree. I mean, it's exactly, you're touching on a point when I think about the moment where I'll have children, and I want to have a big family. It's just so important to just fundamentally be there and make time for the things that money can't buy. And that is also not checking your emails. And when you're there, you're really, really there. And, my folks basically, when the separation happened, they started a business together, and then they closed the company when they divorced and opened up competition businesses. So it was an interesting dynamic. But
one day you'd be helping like one competitor, and then on the next day when you're hanging out with the other parent, you'd be helping the other competitor.
No, yeah. Oh, I took a side. I sided with my mom. For a multitude of reasons, but like, I grew up as well in this dynamic where they were entrepreneurs. So guess what you do on Saturdays and Sundays? I mean, today is a holiday. We're here, right? Like, and it's a joy. It's joyful to be here. Mm-hmm. But it's these days where you have less meetings and you can do creative work and you can spend time doing other things. But when you talk about what it takes to build, and it's none of that hustle porn stuff. It's that it takes full determination and relentlessness, and the whole thing about you surrendering to the cause, almost as if you see it as a work of art. And the best investors and the best founders, they have this almost transcendental connection with what they do.
I mean, the way I like to think about it is that there's not necessarily work-life balance. I mean, that would equate to working from 9 to 5 and then going home. And there's not to say that there's anything bad with that. And some people enjoy that life, want that life. I kind of like to think of it as work-life integration. I think that was in part why I've enjoyed being in SF, despite what we talked about earlier with the city itself. But the people were constantly, whether you're working or playing, there was still some element of work, and you could integrate work with life. So you could go on a hike and be active and be physically active and do things, but you could also be like meeting with a potential company, or meeting with a teammate or a new hire or whatever. And I think like the idea of just integrating your work with your life, because especially in a time like today, we can't turn off no matter how much we might like to, right? I mean, like, our phone is always on us, our emails are always there. And like, there is some element of, I noticed this when I lived in Europe, but like, speed matters. And I think like there is some element of like the US culture to some extent, where like, yes, people work a lot, but they're like, to get things done, you have to be proactive, and there has to be action, right? So if you're taking a few weeks off, and not to say that people in Europe don't work hard, but like, there's definitely a different kind of speed to work at times. And I think actually,
absolutely,
that matters. Like, the ability to move fast. I mean, for founders, speed is the one main advantage they have. Like, the ability to be agile is why they beat an incumbent. And that could be here, or that could be in Europe. But like, you have to do that. So you have to be on all the time. So that's where I think like actually just integrating your work in your life can end up being you obviously have to love what you do. And I feel very lucky to be doing this. Like, I would be doing this no matter what. But that's, I think, the really important thing.
Yeah, you got to find something that feels like play and that has also the intrinsic incentives. So you also do want to put in the time. I think that's the reality of it. I find it that that at least this is how I justify myself in terms, because I used to be a journalist, right? So how is it that you have so many journalists that ended up going into venture? Is that it's so much about curiosity, breaking down complexity into some sort of framework that makes sense, and then sharing it with the rest of the world. And your credibility matters a lot, and your word matters a lot, right? The difference is that as a journalist, if you're right, you get like a pat on the back. But if we are right, we make millions of dollars. So it's
no. I mean, look,
yeah.
Man, you're hitting on like one of my favorite quotes, which is it was by Yvon Chouinard from Let My People Go Surfing. Right. So it's like a master in the art of living draws no sharp distinction between his work and his play, his labor, his leisure, his mind and his body, his education, his recreation. He hardly knows which is which. He just simply pursues his vision of excellence through whatever he's doing and leaves others to determine whether he's working or playing, because to himself, he always appears to be doing both. Right.
Wow.
So that
Beautiful.
I think kind of perfectly encapsulates like how I think like, hopefully we can all get to that point and feel that with work, with play, but they're just integrated together.
Yes, absolutely. So let's talk about Broadhaven and basically like your coming in as an investor. What was the basic, all the professional transitions? Because you worked, right? There was iCapital, Mosaic, Goldman Sachs, and if you had like short that story, so then we can start talking more about venture in Latin America, but just like your transition into becoming a VC, because if there's one profession that there's no barrier of entry is venture capital, but the barrier of permanence is very high. So people get into our business in such most random ways. So just be curious to learn about like your story.
And it's not necessarily a bad thing, right? I mean, I think there's such diversity of thought that's required to do venture well, right? In a multitude of ways that I think that having different backgrounds can actually be very helpful in evaluating people and evaluating companies and looking at things in different ways. So yeah, there's no one way to get into venture. And my path was, makes sense in some senses, but probably doesn't make sense in other senses. Makes sense in the sense that I've been in FinTech my entire career. But basically, so I went to London School of Economics, studied international relations and social policy. So I actually didn't study finance or economics at the school, which is exactly what that's known for. But I ended up actually learning about finance through running what was the largest student conference on hedge funds and private equity. So I ran that conference for 2 years, trying to get people like David Rubenstein or Glenn Hutchins, big kind of industry titans in private equity and venture and hedge fund world to speak. So I actually learned kind of in a self-taught way a little bit about investing in that sense. And then that kind of made me realize I needed to learn about finance in a more traditional way, because I also started a company when I was in college to educate younger investors on impact investing. This was back in 2009 when kind of the impact investing movement was just starting. So I was like, this is interesting, kind of combining my nonprofit experience working for Room to Read. Like, how can you actually blend profit and purpose together? So I was learning all about those kind of things in college in a more of a self-taught way. And then was like, you know what, I need to go and, do this in a more formal structure and formal training structure. So I ended up doing an internship at Goldman Sachs in the UK, which it's a little bit different in the US. Like, I think I was the only person in my class in the securities division that did not have a finance, accounting, or economics degree. So I was looked at kind of sideways, like, oh, what does this kid know about finance?
I think people often overlook, right? Like how, I'm not sure if stuck up is the right word, but like how traditional and conservative Europe is as a whole. Across the board in terms of how that society functions. It's just, for me, it's insane. The more I learn about it, the more there's very little room for you to be creative. There are like very specific paths and you have to follow them. I don't want to deviate but like the way you said it,
it's
shocking.
It's good in some senses and it's bad in other senses. So I think it definitely pigeonholes kids down a certain path, right? So, if you're studying economics or finance or accounting, you're expected to go into those professions. Likewise, if you're studying to be a doctor or a nurse at 18, you're expected to go down into that profession, and you're expected to make that decision at 18, which is very different from many people in the US, where their experience is they go to a liberal arts college, you study history, you study English, you study biology. Well, you study all sorts of things, and you might study all of those things at once, not necessarily knowing what you want to do, but then applying those skills. And I think that's, in some ways, I think that's actually better, right? Because the one, I found this out in my time at internship at Goldman, incredibly competitive. Everybody's fighting for a job. I think less than 40% of the kids got full-time offers after the internship. But the one thing I did know how to do, thanks to my time at Middlebury and also, growing up in the DC area and being lucky enough to go to great schools, was learn how to write and communicate and think critically. And at the end of the day, I think most jobs are actually about that, about you need to be able to communicate written or orally. You need to be able to write really well, and you need to be able to get your point across in a business setting. And that could be through a presentation. I mean, we know this. Founders have 30 minutes to pitch sometimes, and they have that small amount of time to make a first impression. Actually, they may not even have that amount of time because their deck may have to show why something's compelling, and they may have to be great at pitching something. So
absolutely. I mean,
I think is so important.
So important. It's fundamental for success. And I think that in our business, we get paid to have an opinion, and we pay more if we are right about that opinion sooner than others. And having an opinion is also about having good communication, right? And it's just, when you communicate things well and clearly, it even gives you more credibility. It's all the whole aspect of the importance also of beauty and aesthetics in life across the board. So if you get a deck that is a great deck with content, but it looks all ugly, or there isn't really that much attention to detail, even subconsciously your mind will go, oh, I wonder how is it this company's paying their taxes or their finance if they can't take care of the deck, right?
Well, you're forming an impression, right? So, whether you know it or not, and it's not to say that the idea or the founder may not be great, which is why I think it's so important to talk to founders and have them just not necessarily pitch their deck. Sometimes it's great to have them go through their deck, but other times it's great to just talk because you learn a lot about somebody. But yeah, I mean, I think it's super important to be able to show if somebody can't design a deck well, then you wonder how's the product going to be designed. Right. They're just questions that come into people's minds when you start thinking about things. So I think, yeah, I mean, look, I think there's obviously different ways to kind of go through schooling and learn. I was lucky to kind of get the best of both worlds because I got a year of liberal arts education at Middlebury. I got 3 years of very focused study at LSE where you could only study the degree that you're doing. So I couldn't study finance even if I wanted to because I picked international relations and social policy. And there's incredibly successful people. I've had classmates of mine. One of my classmates at Goldman they founded Butternut Box, which is an incredibly successful D2C dog food business. And they had more traditional backgrounds, but yet they've created a D2C e-commerce business, right? So, there probably wasn't necessarily something that prepared them for that in a sense. So it's not one way or the other, but I think it was a great experience to go through Goldman. I ended up doing this internship, getting a job, and I found this kind of, at the time, it was this desk that was actually, so I was in the securities division, and all the sexiest, desks were rates sales or rates trading or equity sales, equity trading, because it's you want to be on the trading floor, and that's what everybody aspires to do.
All in London still, when you got the job, you moved to New York?
All in London. This was all in London. Yeah. So I just found this desk that actually couldn't even sit on the trading floor due to the Volcker Rule. So this was post GFC, global financial crisis, and
what is the
principal investing
for the folks that
the Volcker Rule? So basically, there's a ton of things that happened with the Volcker Rule, but basically it was trying to limit banks' ability to do principal investing off their balance sheet. And if they were doing it, they had to separate that activity out from activities that were customer facing. So like everything on a trading floor, right? Whether you're a salesperson or a trader, you're dealing with customers on both sides, right, of that trade. So, and they were privy to information in the public markets that may be different from information on the other side of the wall that would be in the private market. So things we were doing on the desk that I ended up joining at Goldman, which was a principal investing desk, we were actually investing into market infrastructure. So investing into exchanges and clearinghouses and market data businesses. So things that were, critical to Goldman Sachs's operations and the kind of function of financial markets broadly. It was incredibly fascinating, but again, like I said, when you're 22, like you want to do the coolest things, and this desk was sitting, off the trading floor. They were this small team. Everybody was like, "Why would you want to join this team?" It was called the Principal Strategic Investments Team. It's like, it's like you're going to do market structure. That sounds so boring. Why wouldn't you want to do trading? You can trade stocks and all that kind of stuff. And I was like, this actually sounds kind of interesting because I'll get to learn about the markets, the pipes and plumbing of the markets and how finance actually works. I'll get to learn about how Goldman thinks about investing and how they think about strategy. So I couldn't have been more lucky to have joined that team, and ended up spending a lot of my time thinking about, obviously doing all the work that an analyst would do, but it was like right at the beginning of the FinTech boom. So this was 2012, 2013. There was $3 billion of venture capital, global venture capital dollars invested into fintech companies. To put that in perspective, like the week that Robinhood had their liquidity issue, they funded their business with about $3 billion or so. Like in one weekend, there was $3 billion of venture capital money that went into funding Robinhood. That was the entirety of venture capital dollars in 2012, 2013 going into fintech companies globally. And there were some great, fintech companies around. So like, Lending Club existed, Zopa existed, things like that. So there were definitely companies around, but it was so early. And I spent my time kind of thinking about two things. One was how social was impacting finance. So, we're young enough, 32, to have grown up on Facebook and Twitter a little bit and LinkedIn. So I was like, okay, how is social and consumer social going to impact finance and impact the way people think about investing, the way they interact with investing? Is it going to become more social because we were used to communicating online? So I spent a lot of my time thinking about that, and then how these marketplaces were going to disintermediate finance. So ended up thinking a lot about Lending Club and derivatives of Lending Club. And actually one day I got a call from a lending club for solar called Mosaic. It was this small company, just raised a Series A. They were doing initially Kickstarter for solar. Then they started doing Lending Club for solar, where they were enabling people to, invest $25 minimums into commercial solar projects in Oakland, California. And they said, "Hey, do you want to come and be our first sales hire?" And when I told my Goldman colleagues I was going to go do this, they looked at me sideways and said, "Why the heck would you leave Goldman and go to this like little startup in California?" And I was like, you know what? Like, I could be totally wrong on this startup, but I know I'm not wrong on marketplace lending at the time. Like Lending Club had kind of grew up and became a multi-billion-dollar business, one of the big landmark IPOs in fintech a few years later. And I wasn't wrong on solar either, right? So the cost to produce a solar panel had gone down 99% from like $75 a panel to like 75 cents a panel in like 2013. So like the solar and kind of clean energy revolution was upon us, even with its fits and starts. So I was like, you know what? I'm just going to go do this. So joined as number 16, was the first sales hire. I probably had no clue what I was doing. I was 24, but had to figure out how to kind of structure fixed income products and sell them. So learned a ton in that experience. We went through we went through our. What
I think people don't know, right? Like, no, I was just going to say is the fintech component that is inherent into energy, even if it's solar or wind or whatever, because right, you have the maybe talking through that in terms of forming, right? Because it's not a simple type of sale.
Oh, no, you need to finance, right? You need to finance a lot of these solar projects, whether they're commercial or residential. At Mosaic, we were initially trying to fund mid-sized commercial solar projects because there was a gap in the market. A lot of these mid-sized projects, it was hard for them to be underwritten and funded in a way that didn't involve banks and long processes. And we knew that people, individuals very passionate about investing into causes or things they care about, like climate change, and they want to generate returns, right? They want to generate fixed income returns. So instead of investing in some bond of a company they couldn't care less about, why not invest into a solar project and earn 7.5%, 8%, 9%? Now, in practice, that was a lot harder than it seemed, right? Because like as a startup lending platform, you have to figure out your cost of capital. And like we had to figure out how to get capital to lend to these projects and then fill it with the crowd, as most marketplaces have these kind of marketplace dynamics that they need, need to balance out between supply and demand.
And if you're providing that type of yearly return, like who's willing to actually be your source of capital? Because then they have so many choices, right?
I mean, that was why we actually pivoted the business. So after a year of trying to figure this all out, we pivoted to what has become a residential home solar loan originator. And this is where I think probably the biggest learning that I had from a business model perspective with a lot of these lending businesses and fintech is that go where your edge or your zone of influence is. And with Mosaic, that was originating. And it means getting capital from the institutional side. We tried to get capital from the individual side because we thought like everybody should own a piece of a solar project. And that's like the solar revolution is people powered. Like those were the type of slogans we had, and totally get it. And I think it's a great thought in theory, but in practice, you need institutional finance to actually end up kind of getting these platforms to scale. So we became an originator. So we would originate loans for Solar City, Sunrun, SunPower, who are putting and installing solar on people's rooftops, residential, much easier to underwrite too than on the commercial side. Commercial side, it took months to underwrite a project. And that was part of the kind of marketplace dynamic that was clogging things up is we'd sell out a project. We'd sell out a $2 million project in 24 hours on the commercial side. But it would then take another 2 months to underwrite the next project. And all these people who were like, I want to invest every week, they couldn't invest for another 2 months. So that's when we realized, let's go to the consumer side. People are buying houses, wanting to put solar on because the economics actually worked in a lot of states, California, Massachusetts, New Jersey, Maryland, et cetera. Actually putting solar on your roof, you'd save money on your energy costs. So like originating for the big solar installers made a ton of sense. And then it means we had to go get capital from now the Goldman Sachs of the world and the DZ banks and the New York Green banks, et cetera. And now Mosaic's done about $7.5 billion of home solar loans that they've originated since 2012. And Warburg Pincus has put in about $300 million of equity into the business. So it's been a windy road, but it was a great experience. That kind of led me to the next stop in the fintech world, which was got a call from a former Goldman partner who was thinking about joining a platform that had just spun out of Credit Suisse called iCapital Network. They were trying to give the high net worth community, kind of individuals, family offices, and wealth managers, access to private equity funds and hedge funds at much lower minimums. So he was like, hey,
terrible name, huh? But just for the record, I'm not sure if he went anywhere.
We've thought about that. So the name, the name has a lot left to be desired, but the business does not. So I'll tell you why. Yes. So he called me up. They were just starting, just spun out of Credit Suisse. Then the origins of this were really around Credit Suisse's private placement group. So that the group at Credit Suisse, they would raise large amounts of capital for very large private equity funds and hedge funds from institutional LPs. So big foundation, pensions, endowments, sovereign wealth funds. And we saw this huge opportunity to go after the high net worth community, which was woefully underallocated to alternatives. So, the average wealth manager in the US, 1% to 5% allocations to alternatives. So private equity funds, hedge funds, et cetera. Those can be the highest returning investments in an investor's portfolio. I mean, look at the endowments like Yale or Harvard, where they're 20, 30, 40% allocated to alts writ large, and their returns are significantly better as a result. Now, you're more illiquid, and I think that's where the individual side people need to figure that out. But that was exactly what the thesis of this business was. So he called me up and said, hey, you've invested into these kind of marketplace businesses. Goldman, you worked at one of these crowdfunding platforms. You helped build a family office wealth management network there. What do you think about doing this for iCapital? So I decided to join, help build the sales team with two other guys. I was employee number 8, built the family office network there. and we grew the platform to what's now about 75 billion of assets on
Incredible.
our platform, and have raised a few $100 million from all the big banks, WestCap, which is the former CFO of Blackstone, and Airbnb, his fund, his $1 billion fund, and then BlackRock, all big investors in the business, and really trying to give the high net worth community around the world now, because they have a large presence in Asia, Europe as well, since Ping An invested into iCapital.
Latin America as well. A lot of good presence there.
Starting to, for sure. I mean, there's family offices, there's wealth management groups, I think, that want access to alternatives because they realize that can be a higher yielding part of the portfolio. So I think iCapital was something that I don't think could have existed in current form 10 years ago in the same way that it does now. And now I think I have no reason to believe that iCapital can't be a multi-billion-dollar business, if not more, just because of the sheer size of the assets on the platform.
What do you think is going to be the rebalancing of personal portfolios of ultra highs when you think about this like tectonic like shifts that we're seeing happen right now? Meaning, you could say that I don't know if you read Swanson's book, and rest in peace, by the way, right? Like, he died, I think, a month ago.
Yeah, he did. He passed away a few weeks ago.
Passed away a few weeks ago, right? So, Pioneering Portfolio Management, which is like the Bible for all the endowments, and very helpful book for people like us. A little boring, but like it's still it's a very helpful book. And when you think about the percentage of total AUM, let's say I am an individual and I'm worth $10 million. How much? And then, okay, this is a generalized question. It doesn't take account in specifics and all that stuff. But what percentage do you think that is the correct one for them to have exposure to illiquid private equity? And that could mean venture, could mean, regular leverage buyouts and so forth.
It's a great question. So I think there's a few elements to this. I'll answer for the high net worth, and then I'll answer for the non-accredited investor, as we're seeing platforms provide access to the non-accredited investor. And I actually wrote a blog post about this on Allco's mainstream called 60-40 Portfolio. It's no longer, right? Because it hasn't existed for the high net worth for a really long time. It shouldn't exist for the individual either. Now, having said that, it should be done in a very thoughtful, educated way. High quality products should be provided to any sort of investor, whether it's the high net worth community or the individual investor. But I think there's no prescriptive answer. So I'm not going to sit here and say allocations to alternatives for the high net worth investor should be 20% versus 10% or 15%. But I do think that there should be some level of allocation to alts for every investor. And the reason why is when you look at the most sophisticated institutional investors, they are outperforming in some respects, in large part because of the fact that they are exposed to alternatives. Now, I also know, and I'm cognizant of the fact that Yale or Harvard endowment has a chance to get into Sequoia or Benchmark, which are the top decile venture funds, and other people are not. So that is where I think that there's a little more nuance to all of this, in that it's only really worth doing venture capital if you're going to be in a top performing fund. It's not worth doing it if you're not.
I raise a lot of money on that premise because I would meet with family offices or billionaires that would have done so many mistakes at the personal level because they thought that startup investing was easy, or like that it's just a matter of like it's so hard.
And access, I think access, whether you're a VC, access matters a lot into the types of companies you get in. In the same way, being an LP, access matters tremendous amount as well. So like getting into the best funds, and it doesn't have to be Sequoia or Benchmark. There are the best brand names, and there's a reason why they're the best. And persistence and performance is true when you build up a brand that creates enough of a flywheel around that brand where you're going to see the best deals. So absolutely reason to believe that people would be sprinting to the doors if they could get into the big brand name funds that consistently outperform. Now, I think that there's a whole nother set of managers like yourself, the emerging managers who have smaller funds, and will hustle for their companies, find ways into the best companies, and be in different networks maybe, or different ecosystems than Sequoia or Benchmark or some of these other big brand name funds. And you can outperform there as well. But you have to find those managers. And in fact, we just invested into a company at Broadhaven that's trying to solve this problem in the VC world. Hasn't been announced yet. But we believe that this is something that is really
allocate.
true. I can't confirm nor deny, but there is, but there
Samir's doing a great.
is.
I hope that is the one, because he's doing a phenomenal job, and I think he's awesome. But you don't have to respond.
There's a huge problem to solve, right, between the GP community and the LP community, because emerging managers have trouble finding the right investors for them. They sift through investor after investor, and it can take, average fundraise takes between 18 20 months or so, which is a ton of time, and it's a huge time suck. It's one of the reasons why at Broadhaven, which I'll get to in a bit, but we actually have decided to go the route of permanent capital and investing principal off of the balance sheet of our bank and our affiliated bank and our partners, because that frees us up to then spend that time that we would be spending fundraising and dealing with investors and LPs. Instead, we can spend sourcing, picking and winning deals, and then helping companies. So I think, anything that can create more efficiencies in the process of capital raising for and discovery for LPs and GPs is tremendously helpful. It's something I learned in spades at iCapital. And I mean, even the biggest funds need to find access to other pools of capital, which is why I think the high net worth community is going to increase allocations over time. And again, like I said before, I think that, everybody should have access to alternatives, because it can be a higher returning part of their portfolio. Again, I say that with the caveats of, you need to find high quality assets that you're investing in. That could be a fund, that could be a direct deal. Like you were at Funders Club, like if you were in some of those companies, Coinbase, Instacart, I think SendGrid was in there, you name it. I mean, you would have done really well, but those are high quality assets. Like they're not, some random startup, down the street who nobody's ever heard of and has a messed up cap table and no VC or institutional investors. So, the quality matters. So, so I think that's the platform's job, to actually make sure they're providing or serving up assets in a responsible way, whether it's a fund, it could be a sports card. We've invested in a company that's doing the Coinbase for sports cards called Alt, and putting high quality assets in the platform matters, right? In that sense too. So I think any of these types of platforms that are giving people access to alts just needs to be done in a responsible and way that educates people, but really important to give people access, because that's where they can outperform.
Absolutely. And I mean, the quality part of it, when you're looking at Cambridge Associates data, and for the ones that don't know, Cambridge Associates is basically this private company that has been analyzing and, reporting on venture capital data for the last 25 years or so. You look at the top 100 companies of any given vintage in venture, they will return the entire year. And there are typically about 10,000 deals that are being happening every year in venture in there. So you need access to the top 100, and if you get the top 10 out of the top 100, it's 30 times more than the 90th, or the 95th company or something like that. So,
I mean, I think that's a really important point, right? Because that shows how hard venture is. In any given year, there's only going to be a select few investors, either funds or individuals, who are able to get into these companies that provide returns that represent power law dynamics, meaning that if you were in that deal, you would have such greater returns than any other investment that there would have been, which really does actually create the case for an index fund for early stage venture, right? Giving people access to pretty much every deal that's done in a given year, or as much as you can, because missing out on that one deal matters so much more than investing in everything else and losing money on a lot of those, but still being in that deal that is 1,000x return, because that'll return all the money you lost multiple times over. So.
But only if whatever group that you have within that ETF or index doesn't comprise of the entire asset class, but because most startups fail anyway, but it comprises of, maybe Samir picking up the top 30 firms every year, and then that is something you invest under a basket of stuff. I'm assuming that he hasn't given me the full pitch. We spoke of, but that would make perfect sense. And it's something that if there's a human qualified to do that on Earth, it's him. So it's basically, it's tough, and oftentimes also the feedback cycles are so long that you only learn after the fact, right? So for me, well, how did we met, right? Like, what was our connection? Well, it was right after the YC demo day, and I'd sourced that deal with the partner with Covey, that there was like $50,000 left, and we took a haircut out of our own allocation to bring you in. But because I remember it was, at that Soma Capital, it was like a news party at that house, and we were on that little corner near the fireplace, and I was like, oh, this guy, he hustles exactly how I hustle as well. So like, it's different. He's not one of the, because we know how many bozos out there in venture just like send emails, say, oh, trust me, I'm a really nice guy. But I saw it in your eyes. You had these like Rambo look, like, you wanted to get it done. So I was like, oh, it's going to be nice. I am interested in playing games with Michael for the long run.
I appreciate that, man. No, I mean, I think that was, first of all, that was incredibly kind of you. Like, an investor giving up an allocation, part of their allocation, which could become incredibly valuable someday. So I forever am indebted to you for that one. But no, I think it's a really important point, is like, the investors that you bring into a company can really make or break the trajectory of that company. I mean, having the right people around the table matters so much, right? And getting people who help and actually come through with that help matters a lot. Now, I think that's in one part why many emerging managers are great people to work with, because they will hustle, and that investment that they make and every dollar that they put into that company matters so much to them, in a way that it might not matter to other funds. So that's where I think, like, I mean, you were incredibly helpful to Adamar and Covey from early days, right? And that was hugely helpful to the trajectory of that business. And I mean, that kind of thing, whether you're a big brand name or not, really, really matters. So no, I just think that it's like, having been on the startup side at two companies that I think will now become pretty successful, but at the time that I was there, it was not obvious that would be the case. It's just so hard to build a company. So anything you can do to help a founder, I mean, I think you feel this way as well, but like, anything you can do to actually help the business. And, it doesn't necessarily mean calling the founder every day, but it means doing things that are constructive and actually move the needle. It could be making the right introductions, spending time with them, talking strategy. It could be even just like, being a sounding board for them when they had a really tough day, whatever it may be. Like, that ends up being really, really important to the founder early on, because it's just so incredibly hard. So all we can do as VCs, I feel, is like support them in their journey however they need that support. And that's the type of thing that really makes the difference.
Yeah, absolutely. It's the whole ethos about the whole, core of like my life, my mission, the mission I have in my life is partnering with inevitable people, because ultimately we are insignificant, right? Like, these people, they will be successful irrespective of us, but it is our fiduciary responsibility to make sure they get there faster, with better mental health, with good values, and hopefully getting properly rewarded for it. So it's we're not in the arena. Maybe we're there on the sidelines screaming, and you have to know, like, when is, yeah. It's
kind of like a coach, though, right? I mean, I think venture capital is very much like being a coach or a sixth man. Like, I kind of like to think about, like, my role is as the sixth man, like when they call you off the bench because like they need you to do something, and it might be like at that split second, like you need to go and help them like right away, solve this problem, put out this fire. Like, you got to get off the bench, you got to get in the game, right? And sometimes six men can be incredibly valuable, right? Like Andre Iguodala, he was a big reason why the Warriors won NBA Finals, and he was named Finals MVP. One of the years that they won, because he came off the bench and played great defense. He hit clutch 3-pointers, and like, he wasn't the starter, but it didn't mean he couldn't add value. So that's kind of how I like to think about this role, is like, you're there on the sidelines until they need you to jump in, and then or you need to be proactive and jump in at the right time. But it's extremely important the times that you do that, because it can, to your point, make a difference in the success of a company or in the speed at which a company gets to where they want to go.
Oh, it's massive. I mean, only sport I really care about is Formula One. But it's the only one I care. But I love reading books about Kobe Bryant, for instance, right? Like Kevin Lee, that is also a guest here in this podcast, gave me the Mamba Mentality book. It's a great book. There's that other one, The Score Takes Care of Itself, from Bill Walsh. And when we were talking about the quality of your deck, how you write your emails, your presence in social media, it's the same concept that he said. When he took the 49ers were a shit team, and they were like, oh, I'm going to teach the receptionist on how she's supposed to pick up the phone, because you got to do the small things right so you can get the big things right. So this team mentality, sports teams metaphor for startup building, is phenomenal. And the last point I'll make is that whole thing about the Shopify CEO letter. That's like, hey, we're not a family, we're a team, and you got to perform, otherwise you're out. It's appropriate.
Well, I think you're hitting on an important point, though, too, that I think we sometimes may lose track of, and even maybe others outside of being a fund manager. But you're a fund manager who started a fund. Now you've started two, actually. And we've had to start Broadhaven from scratch. Like, we were lucky enough in that we had a bank that's become a market-leading fintech investment bank, and my partner was incredibly successful and is incredibly thoughtful and smart, and was an executive and built financial services businesses. But we didn't have a brand in venture. I mean, you had to create multiple brands in venture. So, like, there is some element of, like, I do think I love the underdogs. I love emerging managers, in part, I think, because I love the underdogs. But if you're an emerging manager, you are likely starting your fund, and you're an entrepreneur too. And that's where I think, not to say that the bigger funds are not entrepreneurs either, right? I mean, anybody running a fund or who founded a fund, they're still an entrepreneur. And sometimes I feel like that gets lost in the shuffle a little bit, because we're the ones who are on the buy side, right? People come to us and ask for money. And that's true in one sense. But on the other side, if you have LPs, you have to go and get LPs just like founders have to go and get VCs. So there's, I think that you obviously understand this because you have done the building of a firm. But I think that's the other piece of it, where, like, many emerging managers actually are entrepreneurs too. They may just not they may not think of it like that, or may not be seen of it like that, but it is the same thing, just slightly different in terms of being able to innovate on business model in the way that a founder might.
Yeah, well, that's why I think we get along so well, and also we typically build more empathy with founders, because I guess they will see how hard we work as well. The type of venture professional that I don't appreciate is someone that, to a degree, never worked really hard, and they're building a career in VC, and they have this attitude. And I mean, that's the whole source of, like, if you would have to, like, embody the origin of all memes, which are great. I think we need to
let me know how I can be helpful.
Yeah. So, like, that's the source of stuff. It's just like, yeah, no shit, you got to be helpful, but you're supposed to understand how they need the help and then be on the offense. But yeah, exactly.
Well, I think you're hitting on what will be a really interesting thing going forward, is particularly as you have more younger people who are starting their careers in VC and maybe never working on the operating side. So two things. One is, you worked on the operating side in two companies that have done very well. There are probably things that you would not be able to do in terms of helping companies if you didn't have those experiences. So there's that. But then the other piece of it too is, like, the business of venture, I think, is actually really important to learn. And I'm not sure that unless you have to go through actually building a fund, like building a fund model, like, okay, I'm investing X amount into a company, I'm going to own this amount of a company, here's what I need to do to actually return my fund to LPs, or here's what I need to do to get a 3X or a 5X. I think it's hard to internalize that unless you actually had to go through all of the aspects of building a firm and understanding the business of venture and dealing with LPs, if you haven't really done any of those things.
Absolutely. I mean, even at Funders Club as an associate, my framework was completely different than the framework I had starting One VC and raising $42 million, deploying the fund, and now with Atman. Which we'll catch up in person, and I'm happy to tell you more about it. I've been building in complete silence, but it's been really fun. And when you look at things, and I mean, the associate, I remember, my first month there, I was so fucking scared. And it was basically almost like, look, if you don't source a company that is really good for us in X amount of months, like, I think I'm going to be fired. There was this big, like, pressure.
What was the first company you sourced?
Pipefy.
Okay, so you did okay. You didn't get fired.
No, it's above 400 million. It's a good. And then the second one was Rappi.
Okay, you're doing okay.
We were doing okay. That's true. And then there were others. Aircall, Rapid API, Big Finite. So I was fortunate. There were first year as an associate, there were 11 checks and then 11 up rounds in 6 months. And
that was before the madness of today that we have. So that actually is probably even more impressive, because now many companies are getting funded and there's plentiful amounts of capital. That was not the case back in 2015 when you were doing that.
Yes. Well, thank you so much. And you know how I would operate in the early days. I continue to be. I was obsessed. I am still obsessed about it. But I would pick weekends and I would say, all right, this weekend. I would go and work Saturdays and Sundays by myself at the office, and that for me was therapy. I would feel very peaceful in that scenario, and I would say, okay, this weekend I'm going to break Peter Fenton apart, and I would read everything and would consume every possible video, and I would I need to start making these lists public. So I have what's the Peter Fenton diligence checklist, and then I would do that next weekend for Peter Thiel, and then Doug Leone, and then Bill Gurley, and then so I did that, and Byron did, and I did that for 150 plus investors during the course of a year. Because there's that whole thing about great artists, they steal, right? And then we are in the business, it's an apprenticeship business. So, it's like baking bread or, right? So,
how important do you feel that it is to be an apprenticeship business versus go and because yes, I guess you were technically an apprentice at Funders Club, but you didn't go work for a big brand name fund, become an associate and then spin out and then launch your own fund after working with some great, well-known managers. You learned, but it was self-study. So how important do you think the apprenticeship model is in venture? Or is it not necessarily required given the open sourcing of information that you can get to now?
It's a great question. I think that you need to learn how to learn and have enough discipline, because there isn't a Y Combinator for emerging managers, and there are a few people trying to start it, but I still think that it doesn't really bring the full scope of when you're there in the field of battle and the stuff that comes up. No one really teaches you some of these things. Going through a first audit or a first big tax season, or having a zero on your portfolio and having to write that email to LPs, right? There are these big moments that we all go through. So the first exit, and then what do you do? And you recycle, you distribute. There's all these little things. So I think that it's far better to work for someone else while you have the intention to do your own thing. For me, though, what was my path, right? My immigration journey to this country was not simple. I've had 4 different visas, 3 waivers, 18 letters of recommendation. I was kicked out of the U.S. once, meaning my H-1B petition that was approved was then arbitrarily declined. I filed an appeal against the federal government through USCIS, got a letter of recommendation from Michael Bennet, a federal senator, and then reversed my case. And then I was able to get jobs as an H-1B holder. And then after that, I self-sponsored my green card through this category called EB1. So they have, it's like an 01, but harder. And, I use the same lawyers as the Carlyle brothers at Stripe and a few other friends. And this is the guy that does it for all the Sequoia immigrant founders. It's if anyone needs help in that regard, just ping me on Twitter. Happy to connect you. His name is Chris Wright. He's great. But anyway, I went through so much that for me, I was like, I don't want to get a job at Sequoia or Benchmark, and even if I can, I don't know if I can, but it wasn't interesting to me to go through the ropes. And I have friends that worked at Excel and Bessemer and all these other firms, and they source amazing deals and they got zero. It's so political, and then they don't distribute the gains, and it's just it seemed like a horrible path that it would be I'm gonna have to pay this 10-year penalty to then do it. I was like, you know what? And I had no idea that it would be so hard. But I was just saying, I'm just going to do it. And then, kudos
that sounds
to
like spoken like a true founder. Like you have to be naive enough to not realize how hard it actually is, or else you probably wouldn't do it.
I was very, very naive. And you have to make compromises, right? Like ultimately, I think that today, with rolling funds and just being a social media influencer to a degree, even a social media influencer, not in the, haughty OnlyFans girl, like it's not that, but just being an influencer in your own field of business, being recognized as an authority, you can already be in business, right? There are many examples. So there's Sahil at Gumroad, there's Pompliano, like all these people that probably will not get jobs at traditional firms. And if they were to start, back when I started with one VC, it was hard. I mean, we all had to make compromises to have access to capital, but today that's not the case anymore. And that's the beauty of what's happening right now, even with Republic or, I mean, there's a lot there to unpack, but.
Yeah, no, I think that's totally right. I mean, I think if we break down the social media component of venture, I think incredibly important. And then that does lead into there's so many different ways in which people can access capital. But no, I think like firms will do it in different ways. And I think certain firms have an advantage in the fact they already have a brand, so they may not need to do it as much. But I think that funds or fund managers that do not kind of get out there in some way, shape, or form, and do not kind of have media, brand, or distribution will struggle versus those that do. Because to our conversation earlier about Twitter, people see things now that's just one echo chamber, but that can be incredibly powerful as a way to build a brand, access deal flow, in some companies' cases, access other customers, and it's all free, right? So I think it's incredibly important for firms to have brands or some form of content, right? I mean, I think you're doing it in your own way. I'm doing it in my own way with the podcast and content platforms that I have, but like, you're putting yourself out to the world. People can see who you are. It's kind of like, it's the only way in which you can really scale yourself, which, as we know in venture, is a very hard thing to do. We can't scale ourselves. Yes, we can scale our firm, but with that comes very specific choices and forks in the road. If you scale your firm, you have to raise more money because you have to hire more people and you have to pay for those people. And then when you scale your fund, you can only do certain kinds of deals, and you have to hurdle over larger AUMs in order to generate the returns your LPs want. So you have to make all these choices, whereas I think the ability to push content out and then have people come back and see that, whether you're a $5 million rolling fund manager, an angel investor, a seed fund that's $50 million, or a $100 million fund, or the multi-billion-dollar fund, like you can be out there and have your brand out there, and people can see that while you're doing other things. And it's the one way in which I think people can scale themselves, or firms can scale themselves, without necessarily having to hire people to do it.
That's wonderful. Yeah. I mean, there is an example that we have here, I think, was what, Gagan did with Maven. For those that don't know, he was a founder of Udemy and Sprig, and, early advisor, launcher to Lyft. More than a launcher, I think I've used the wrong expression there, but he raised $750K from 479 investors, and then he raised a $20 million Series A from Andreessen. And
Yep.
Did you invest in that company?
So I did not invest into Maven. So we do FinTech at Broadhaven. We think of FinTech very broadly. Like we would do something like Covey, which is a car leasing marketplace, or a digital freight forwarder like Nowports. But we did not invest in Maven, but we invested in Republic. So I was actually one of the first investors in Republic back in 2017. And then we participated in the Series A. And I think to your point about look, he raised money from 479 investors, some of which were influential, some of which were probably going to become customers and use the platform to access classes that he's teaching, these kind of specialist courses or cohorts. I think it's an incredibly powerful tool. So I think there's two things to unpack with Republic that get me really excited there. So one is they're leveraging the power of community, right? And I think previously, all online investment platforms, iCapital, Funders Club included, And many of these early crowdfunding platforms or investment platforms faced a lot of skepticism because people were like, oh, this must be negative selection bias. You're not going to get the best companies because the best companies or funds, in iCapital's case, don't need to raise money on some online investment platform. That seems like where people would go when they have no other options, and it's the platform of last resort, right? And I think had that kind of element, you obviously disproved that at Funders Club with Coinbase.
Yeah, I was just thinking about the people that put money on Coinbase at a $10 million valuation on Funders Club. I wonder how unhappy they are.
They're probably retired right now. Even if they put in 50K, 100K, whatever, they're probably retired. So I think that's where, I think things have started to change, but up until very recently, I don't think people kind of were able to cross that chasm mentally. Even with something like Republic, I think a lot of VCs have always looked at that business and said, wait a minute, there's no way that Republic's going to get the best companies. And therefore, if they're not going to get the best companies, eventually people aren't going to start coming back. Well, Republic actually had two Andreessen-backed companies on their platform the round before Andreessen marked those investors up and led the following round. Maven is one of them. So I think what that says is two really interesting things about VC. One is that I think these platforms can get access to really high quality companies. And why is that? The reason why is because these companies are realizing that it's not an either or proposition to raise money from top VCs and leverage a platform like Republic to engage their community. And if you engage in your community, you're able to get customers because there's data that shows that when people actually own stock of something, of a product or a company that they consume the goods from, they're actually more likely to purchase that company's products and do so at the expense of purchasing the competitor's products. So as a result of that, it's like, why wouldn't a company want to leave $1 million in a round open, raise $1 million from 500 investors who are like rabid, true fans of this company, who are going to use the products, spend money on the products, tell their friends about the products, and then also raise from a top VC. And I think that's the world that we've entered into now. And that can be incredibly powerful. And then some of those people could be megaphones. I mean, some of those people might not be accredited investors, but they might have 50,000 followers or 100,000 followers on Twitter. And if they tweet that out to people, then the company may end up getting more customers. So it becomes this, I think, this supplemental tool that companies can really use to actually help them grow their businesses rather than just go the traditional route of funding.
That's incredible. And it's funny because I'm right now working on a deal that it has exactly that dynamics, which was basically B2B tools for influencers, and the founder basically said, look, like, I want your help towards, I don't have the time, but can you be the one that facilitates? And we put all these influencers into this SPV, and it's incredibly powerful. And they want to be able to say that they are customers and investors as well, even if we have a tiny check. And back in the day, 4 or 5 years ago, we really had to pitch. I mean, we structured this whole pitch on Funders Club because it was even, some founders would say, oh, I guess it's like, I'm not as great as so-and-so because my round isn't oversubscribed by the traditional players on Sandhill. And now it's not even that it's perfectly fine for them to coexist, which it always has been, but you kind of want that actually, because it's almost as if, you give access and you give room to the little guy as well. So it's, in a way, that's the socialism I can get behind.
Well, sometimes the little guy can end up helping out more than the big guy, right? And we've seen that with emerging manager VCs. Why not the same with the crowd in some cases too? And I think the other thing that a platform like Republic's done a really good job of is like, everybody has an investor profile and they can share what their expertise is. They can share where they can help. And eventually, I mean, I think Ken Wood, who's the founder of Republic, would say that the hope is that like you get this incredibly large, global and engaged community of investors and consumers who actually can help companies. And you may uncover or unlock kind of expertise or specialist skill sets or networks that other people may not have. So I think it actually becomes a really interesting value proposition over time as you start to do those kinds of things. And just in the same way why like we're seeing this explosion of influencers investing into companies, I think it's it's now culturally significant to invest into companies. Influencers are seen as culturally significant, and they're able to engage their fans in different ways. And that's really powerful when an influencer invests into a company and their fans follow that. And I think it's honestly, it's the hard work that many of the companies that we talked about, the early days of FinTech, have put together, right? The infrastructure to enable things like SPVs to be created. That's what's enabling this to all happen now. And I think it's a really exciting trend for FinTech and for more broadly the startup ecosystem.
Absolutely. I mean, I think the final saying on that is basically you got a bunch of influencers that are now wanting to become investors, and then you got all these, Sequoia benchmark partners wanting to be influencers. Even us, to a degree, right? We're all becoming our own little media company. If you're in Houston, you buy Clubhouse. If you're us, we bootstrap podcasts.
And exactly. We do it on our own, but it's, hopefully like the self-selecting people, like there will be people who care about learning about inevitable people. I actually think that's probably a large cohort of people. Who knows how many for my podcast, but for all the podcasts that you're doing on your podcast about inevitable people, like there will be a lot of people who probably want to listen to that. In Alts, which is one of the podcasts I have, like there will be a certain subset of people who care about alternative investments, but that's the community I hope to reach. I hope to educate wealth managers. I hope to educate, investors and other VCs, and then, individuals who want to invest into that space. And then same with community times capital. Like there should hopefully be a select set of people who are like really excited about this and want to learn. So, and that's all it takes is like, we want to attract the people to us that, would end up finding what we're doing interesting. And hopefully that's a good thing for everybody.
Absolutely. Michael, this was such a pleasure. I really enjoy. I feel like, it's just because we do have a time limit, but I think you and we could be jamming like
for
this
hours,
for, well, we'll see each other this week. So I'm excited for that. I always like to wrap up as well with a few, just quick, rapid fire questions, just because I'm always interested in morning routines. So if you had a perfectly
fire away.
What is your perfect morning routine?
Ooh, perfect morning routine. Okay, so try to wake up around 6:30, 7 o'clock. Usually depends on the time I go to bed at night. If I go to bed before midnight, which I'm trying to work on, then I'm usually able to do that. Then another thing I'm trying not to do is not check my phone immediately when I get up. So I think that wires the brain a certain way. So in an ideal morning, I'm not checking my phone right away. I actually do a cold shower in the morning to wake myself up. I was actually a big water guy, so I swam growing up, and getting I used to do 5 a.m., 5:30 a.m. swim practices. So that would certainly wake me up. So I'm trying to replicate that a little bit. Then I try to get some work done. Then I try to work out relatively early in the day if I can, because I just think it's so important to get the mind moving, because that'll get the body moving, because that then gets the mind moving. So that's usually my morning, and that takes me through, a good bit of the day, and then I'm into the afternoon and evening where I'm just continuing to work.
Nice, very good. Well, thank you so much for your time here today. It was a pleasure. And I hope to co-invest with you many, many, many times. And it's just wonderful to spend time with you, my friend.
Likewise, man. It's been awesome to see all the work you've done, both with one VC with Atman now, but also with the content you're putting up on your blog is prolific too. I think you have over 12,000 people who read, so that's pretty incredible. And that takes time as well. So I know that being a creator is not easy, and you're doing that while running a fund. So really impressive and an honor to be on the podcast.
Thank you so much, Michael. It was a pleasure having you on the show. All right.
Thanks, Pedro. Appreciate it, man.